What's up, family? I'm the guy that showcase and promote African-American businesses operating here in the greater Phoenix area. Please help me further support these amazing entrepreneurs by not only supporting my YouTube channel or following me on Facebook, but also stop by their businesses and give them a little economic support. My name is Shaka Shabazz, and this is African-American-Made. How you doing today?
Great, how are you?
I am doing great. Thank you so much for this opportunity to talk to you. We've been trying to do this for a while now, a couple months.
Yes, sir. Yes, sir.
I'm so glad that we got it together and we were able to do it.
Sure.
Won't you tell me your name, the name of your business?
Okay, so my name is Lavelle Bridges. My business is London Bridge Group, and I'm originally from Detroit, Michigan.
Oh, okay. Another Detroiter, man. I tell you, I've interviewed so many Detroiters,
Okay.
Business owners here in the Valley. You guys get here and you get it cracking. Y'all don't play.
Yeah, absolutely, absolutely.
And so you are in the accounting and tax business,
Correct.
among other things. But those
Yes.
are the main. That's the meat and potato of your business. What inspired you, or what interests you in getting into the tax business?
So my accounting background, I guess, stems from, I've always been good with numbers, I guess, for lack of a better word. And back in school, say to age myself, back in the 70s, there was not a lot of options as far as guys. Back in Detroit, we had auto mechanics, we had wood shop, metal shop, and rarely would you see a guy and say home economics back then, or would you see a guy and say accounting or typewriting, as they called it back then. So again, being good with numbers, I took the accounting/typewriting course or that direction, and kind of went from there.
Oh, okay. And I do have to make mention that you are a prior service member.
Absolutely.
And you pretty much, that was kind of your introduction into the tax business. Won't you talk about your credentials and how did you get into doing taxes?
So again, even back in high school, as I've been sort of preparing taxes, believe it or not, since the late 70s, and even after I joined the Air Force, I would prepare taxes for certain, friends, I guess guys I was stationed with or whatever, especially guys who may have, for lack of a better word, a challenging return, something that wasn't as simple as W-2s and things of that nature. So I would get involved with that. But also I noticed after I got stationed overseas the first time that the tax preparer outlet over there was just one outlet, and which still is H&R, and they were the outlet. The other option for you would be, say, VITA, volunteer income taxes, someone that prepared taxes as a volunteer, but not necessarily a professional. So all of that being said, there was a market and there was a need for tax preparation, for nothing else, for military that was stationed overseas with different dynamics, with foreign earned income, or for the seasoned military vet that may have been stationed several places and had multiple rental properties, because at one time he was stationed in Arizona, so he had a property here that he was renting out. Another time he may have been stationed back in Michigan and had a property there, but then he was currently stationed overseas. And by the way, his wife worked off the base on what we call the economy. So we had rental incomes going on, foreign earned income and all of that, which was probably not the place you wanted to take a potentially unseasoned H&R Block tax professional to prepare your taxes, or a VITA, volunteer income tax person, to prepare your taxes. Maybe had a day or two worth of training to try to encompass or to unpack all of that and put it on a tax return.
That makes total sense. And as a prior service member myself, I never thought about all that. I mean, while being a young private, you only got that
Right.
1040.
Well, exactly.
Very simple,
Right.
income form.
Yes.
And based on what I'm hearing here, you're saying like it's really designed to do those basic returns, for
Correct.
service members, right?
Yes.
When you start getting into like assets and things like that, obviously it becomes more complicated.
Oh, absolutely.
Yeah. So you that was your entry into it, and you did that for a while in the military as a volunteer, basically. But that's where you build up your
Correct.
your acumen for it. What made you decide to later go into business in tax preparation?
So after separating from the military, again, I was always preparing taxes. I decided to try it or say to do it as a business where, to actually do it, to make a living with and all of that as my source of revenue. Because again, I was no longer military and had to have a way to make a living. And the taxes, the one good thing about income tax is sort of recession proof, because no matter what's going on in the world, tax preparation season is a given. It's not going to change.
Happen.
We're going to have, and we'll even extend it for you as they've done in the last couple of years to
Right.
make sure you get those taxes prepared and get them in. And with the changing and things of that nature, there's always going to be someone that's going to need a tax professional, which in most cases, those that have what we call side hustles now, self-employments, the LLCs, the S corporations, all of that. There's so much to unpackage or to try to get on a tax return, be it 1040, 1120, 1065, 1120S form, to where you want to complete it for the best of your benefit. It would be best served to have a tax professional.
Okay. Now, you've been in business for a while now. How have you seen your business grow over the years? And what's been some of the major changes? Some of the major changes that you've noticed over the years that you've done taxes in working with people that got small businesses?
Right. Well, over the years, I guess the major change is educating your clients. And what I mean by that is the IRS, they, for the most part, they're not as bad as a lot of people may perceive them to be. However, they are in their best interest. And what I mean by that is that if there's a credit or a deduction or something that benefits, say, consumer more than the IRS, or benefits the consumer where they're going to receive a lot more, that generally will go away. It'll kind of phase itself out, and they will not reinstitute that or renew that, say, credit or deduction and all of that. And that's the things that we need to know. The other part of that is income taxes at the end of the day is a bill. All it is a bill, and it determines how much you're going to pay at the end of the year. Are you going to have enough withheld where you get a little bit of a refund back? But in general, it's a bill. That's all it is. And when you want to get with a tax preparer and things of that nature, you want to have a tax preparer that you want to get with for long term, meaning I know what's going on with you. Now you've, say, gotten married, you have kids, you have rental property, you have investments, you have a business, you've incorporated, you started an LLC, you're doing different things or whatever, which has made changes to your business. And again, back to the income taxes being a bill, when you have younger kids, there are different credits that they qualify for that they're not going to qualify for as they get older, as they start, getting into college or leaving the household altogether. And you need to be prepared for that, because whereas you may have been getting a substantial refund back when you started, well, now your kids are grown and one is going to college, one is not going to college. So one can be your dependent, continue to be your dependent. The other is not going to continue to be your dependent. So all of that being said, the changes, again, is more so educating my clients more so than what the IRS is going to do. Because, again, they're going to give you some credits or whatever. But in general, if it's a good credit, again, for us, the consumer, it's probably not going to be around for a very long time.
You talk about like those temporary incentives and what have you that the government may.
Well, so for example, I guess one of the bigger things for lower income is quote unquote earned income credit.
Yeah.
So in general, let's say a single parent may get, say, $3,000 per year just in earned income tax credit, which is great. However, that means your income level is probably in the range of $15,000 to $25,000 a year. Now, when you think about this, if you have a child that you're receiving a $3,000 refund for that child, because in some instances that person may not have taxes withheld. So all they're getting back is quote unquote their earned income credit. But if you take it and you again unpackage it, so $3,000 divided by, say, 12 months is $250 a month. Okay, what child can you take care of for $250 a month? Even if you just factor in childcare, you no longer have that quote unquote that benefit. And we need to get out of that mindset of trying to stay in that tax range to receive that huge return. And then while quote unquote business or side hustle, we want to be under the table because we don't want to report this income, because we want to maintain and continue to receive that credit. But then that credit also phases out as your child gets older, and your income should be increasing. Because as you start, let's say at 20, 30, 40, 50,000 a year, it should continue to increase and, grow higher and higher. And, you should have by now maybe a house or things of that nature. And again, like you may have gotten married. So now we have two income sources. So we no longer qualify for these things.
So you think that that's really a stifling mentality, or I won't say a mentality per se, but like a practice, because what I'm hearing from you is that if you stay under the threshold just to get the credit, then
Right.
you're not growing.
Correct.
Right? So
Correct.
you're afraid that, well, I'm not gonna get this $3,000 when potentially
Right.
one could make way more than that if they did not try to stay under that threshold.
Well, correct.
From an income standpoint.
Yep, absolutely. And I mean it is a mindset for some who do that. Now, and you think about it from this perspective. So now we're talking 3,000 per kid. So for the single parent that has quote unquote 3 kids, now we're talking 9,000. So that's the person that's in the quote unquote in the break room on social media. Hey, just got my refund back. I got 9,000, 11,000, whatever the case may be. They're missing the bigger picture. Like you said, it stifles them or stifles some of us to say, okay, well, I don't want to make more, or I don't want to make more on paper. I want to quote unquote be under the table.
Which could still possibly, correct me if I'm wrong, stifle you in the business realm because you're under the table, which means there are limitations with doing business under the table, unless you're doing some kind of,
Yes,
unless you're, El Guapo or somebody, but what I'm saying,
right?
El Chapo, but so,
Well,
speak to that.
Yeah, so absolutely. So for example, with the whole COVID thing, and we had the PPP loans and the EIDL loans from the SBA, from the federal government. A lot of those who were under the table, they didn't qualify for these loans because they didn't have a business presence. They didn't have a business bank account. They didn't have a business name. They didn't have an EIN number, employer identification number. They had none of these things, yet they were saying, I have a business and I'm impacted by COVID.
Right.
Well, you have an under the table business, so you have no way to prove it.
Right.
So maybe the first round you may have gotten lucky and got it because, when it hit, when everything started, simply put, the SBA was throwing money at people. And a lot of people took it, of course, and you hear the stories of those that have gotten caught because they did falsify information, all of that. But in general, those that had a true legitimate hustle, it was true, it just wasn't legitimate, and it wasn't in the forefront because it was quote unquote under the table.
Right.
Again, there was no presence. We couldn't look, say, on your, we couldn't find an EIN number. You couldn't show us a business bank account. You couldn't show us a business name. You couldn't show us a business card. So to say now we're going to give you, say, 30, 40, 50,000 that you do not have to pay back, that's not taxable, would have been a huge boost, COVID or not. And unfortunately, a lot of people, we were able to get a lot of guys, financing, funding and all of that, but a lot of guys we couldn't get funded because they didn't have these things. And as we continue to tell them, we need to get on the table and not under the table. We need to have a mindset of we make as much as we can and we'll deal with the tax ramification because taxes, again, it's going to be here. It's not going anywhere. And the more we can be educated about taxes, i.e. get to the place that I know that I'm going to owe, my accountant is going to help me owe as little as possible, but I know that I'm going to owe because in reality, there's, we're going to have a tax liability if you're quote unquote doing it right.
So as a small business or someone just starting out, what are some of the suggestions you have for someone to get ahead of their tax situation? Just starting out in business. What are some things that they could start doing in advance so they're not running into these problems later down the line in terms of all of a sudden they made X amount of dollars, or they don't know what can be deducted, what can't be, what can be declared, what can't be. How would you suggest them they get ahead of that kind of stuff?
Well, I would say definitely try and do your research. We here at, say, London Bridge Group, we offer a class and it's called BYOB. But basically it's Be Your Own Boss. We go over business ownership, we go over business structure, we go over the pros and cons and what to expect and the realities. Because again, unfortunately, the challenges with, say, social media, the TikTok, the bloggers and people who say a lot of things, or even the quote unquote, the get rich, I made X amount of money in 3 days, and
Right. There's a whole lot of that going on.
And it happens. But if you go in there with that expectation and it doesn't happen, you're either going to quit your business or you don't understand the dynamic that this failure that you've just experienced is, on the same road as the success that you will experience. But we got to tweak some things because you went in with the mindset of this, quote unquote, it's going to be easy. And in general, it's not easy. The outlier is normally the guy or the girl who did make the 20, 30, 40,000 in their first month. That's the outlier.
That's the exception, not the rule.
Exactly. The norm, or that bell curve, says we're in the group to where we didn't make any money. Matter of fact, we may have lost some money. And if you go in with that understanding and not an expectation, but the understanding that this may happen, I don't expect to lose money. I just need you to understand that. Don't expect to come out of here as if you've just hit, say, lottery or whatever, where you just made millions overnight because, that's your business was that good. That possibility, again, exists. It's just not likely. So if you go in knowing that, I'm going to have to take a risk. I'm going to have to get, depending on the type of business, financing or get a bank to believe in this vision, this dream that I have, because it's your dream, it's your vision, not the banks. And banks look at it from a perspective of, if we lend this guy money and it doesn't work, how do we recoup our money? How do we get our money back?
Absolutely.
Because we look at it, if it doesn't work, it's your dream, not quote unquote the bank's dream. So we want to know, what's our exit strategy?
Going into business, say I've been a W-2 person for all these years. I decided to, start a video production company.
Okay.
And all of a sudden, in the first 6 months, I make, $100,000.
Okay.
Right. I hit a lick. I got lucky.
Right.
Now, all of a sudden, I don't know what my tax responsibility is.
Okay.
But I'm going off what I made, prior to that.
Right.
Do you find that people kind of get in trouble? And 100,000 is way out of line, but they make a significant amount of money before, as opposed to what they made prior.
Right.
But they're still trying to, they don't prepare to pay those taxes. How do you address that with your clients and to educate them on, preparing for that kind of thing?
Right. So, and that's the key again, back to education. We want to make sure that we instruct our clients into the understanding that if, say, on quote unquote, you're making, or say your gross is 100,000, and let's say you have 30,000 in expenses, so we have a net of, say, 70,000. We still want to prep or prepare or withhold taxes, because now you're going to have to withhold your own taxes because you're not W-2'd, where there's a tax withholding being withheld and all of that. In a nutshell, what we try to tell them, because now they're self-employed, they're required to withhold their own taxes. So, or otherwise they're going to have a huge tax liability and not be able to make make that payment. Or in some instances, people will say not file because they say, oh my God, I made this, say 70,000, or I grossed 100, but I had that 30,000 expenses, so I have 70,000. And let's just say a 15.3% self-employment tax. So at 10%, 70,000 is going to be a $7,000 tax liability. If you haven't put this aside, plus, whatever your other income is, or if you were still W-2'd, or again, if you're married and, spouses W-2 and all of that stuff, now we have a $10,000, $15,000 tax liability. And some people, believe it or not, say, well, you know what, I'm not going to file, or I'm going to wait to file later, whatever the case may be. We're going to ignore this as if it's going to go away.
Right.
And unfortunately,
it does not.
No, it doesn't go away.
It doesn't.
Yes, exactly.
When you talk with someone about, putting this money away and because I'm thinking that there's a bigger educational situation here. So for a person that's just getting into this, this new financial picture, and they're having to think about, which I'm sure this will be the accountant line, right, where they would think about what they need to, what were their expenses, right, deducting those expenses from that, from that revenue, and then like you said, the tax consideration. That could be overwhelming for a person that's never done none of this stuff before. Do you suggest to them, like, should they be thinking about this stuff before they even go into business? Because not everyone comes from a business school, right?
Sure.
No one has that education. Well, open up a beauty shop or open up a barber shop or what have you.
Right.
Or I noticed that people just don't think about what they need to do with that money, and they're spending it as they go, if you
Right.
will. You know what I'm saying? They're not thinking about putting this away for taxes or whatever, or keeping track of expenses and things like that.
Right. So in a nutshell, again, back to, for lack of a better word, say educating. You want to get a tax preparer, but you also want to get an accountant in most cases that is a tax preparer that you can say have a year-round relationship and not just see them once a year to have your taxes prepared, especially as you say start or are about to embark on a business. One of the things I try to tell my clients, new say business owners and existing owners, I try to explain to them, I say, I would rather you call me and say, I'm thinking of doing this versus calling me and saying, hey, guess what I've done? Because a lot of times if you put yourself in a situation where you messed something up or it's going to cost you financial heartache, you probably don't want to hear from me that I have to charge you to fix this problem, because you just put yourself in a situation where now you owe 10 grand, now you got to pay me to fix, but you're still going to owe the 10 grand.
Right.
So had we had the conversation,
so you're compounding the problem.
Exactly.
Yeah.
So had we had the consultation prior to that to make sure that we were going the right direction, or this is going to be the best move for you and your business, there's a cost for that, but it sure would be a whole lot better to have known this information up front versus digging yourself into a $10,000, $15,000, $20,000 hole.
Yeah.
Or quote unquote doing it on your own. Or the other thing is, we have people who, in general, they'll start a business and their accountant is going to be their sister, cousin, or family member just because that person does the family taxes, but they're not a tax preparer or a tax professional. They prepare taxes, say for the cousin, brother, sister, and all of that.
I'm glad you brought that up. What are some of the troubles that you can get into in going that route? I mean, as competent as a person could be doing your taxes, that's not a professional. For the for the person that's responsible or on the hook, what are some of the ramifications for that?
Right. So people need to understand that when you have, or when you allow someone to prepare your taxes, and on your bottom line, on your page 2, it says, if it says tax preparer and it says self-prepared, you're telling the IRS that you prepared those taxes. Or if in the preparer's information is blank, again, you're telling the IRS that you prepared those taxes. So when and if a problem arises, say a number was not correct, or you filed something on the wrong schedule, or just in general, the IRS wants to take a look at what you've done. It is, again, they're looking at you because you say you're the tax preparer. You can in turn say, well, my cousin did it, they just didn't sign it, or, I mean, you can say that, but it's not going to be accepted. That doesn't say get you out of the situation. So now you're going to go face the IRS on your own with this tax situation. And it may be something simple. It may be something that costs you, a cost or have a fee or a fine for years down the road. For example, going back to this earned income tax credit, there are people who say at times will be married or will get married, and they claim, say they have 2 kids. So instead of filing jointly, they'll file, say, head of household, which they're not supposed to be able to do, but people tell them that they can do this. And then say one person will claim 1 kid and they'll qualify for the earned income tax credit. The other person will claim the other kid. Well, the problem with that is a lot of times, from what I see, they don't even change the address, meaning Mr. and Mrs. Smith live in the same house, and they have bought this house together as a married couple, which is easily to track or trace. And then you're saying, well, now I'm head of household, and me and Mrs. Smith Jr. is going to claim this tax, will be on this tax return. Then Mr. Smith and Mr. Smith Jr., for lack of a better word, is going to be on this tax return, and we get this huge earned income tax credit, because now we qualify for it because our incomes are split, and we get all this money back. Well, once it's determined that A, you were not supposed to file like that, or if it was determined as quote unquote frivolous, or you did it on purpose, you may not be able to claim those kids for 10 years. A lot of people don't know that.
What?
Yeah, so now that you've been caught, you're gonna pay this money back, you're gonna pay back penalties and interest, but you can't claim your kids now for 10 years, okay?
Wow.
So
Have
now
you
your
actually
child is,
seen that?
absolutely. I've seen it, and I've explained, I had to be the bearer of the bad news saying, you can't claim this dependent because of what the IRS has now determined that you purposely filed this, you did this erroneous return on purpose.
And that's all predicated on some bad advice.
Well, exactly.
Or ill information that they've got received.
Right. Well, again, we have the tendency to believe that once we have a situation and we tell the IRS, well, my preparer told me to do this, or I didn't know that my preparer did this, we think that that lets us off the hook.
Right, yeah.
And it doesn't.
Mitigates any direct responsibility.
Exactly.
Yeah.
And it doesn't. But more importantly, you're still on the hook for that 10 years where you cannot claim that child. So all of that being said, again, little things like that or whatever, or the things that you can and can't claim. And understand, because we don't audit, and I say we, but the IRS doesn't audit a huge amount of people by the percent, but say 1% of, say, a million, okay, 1% of a million is 10,000, okay? So if you are in that group of that 10,000 and you get audited with something like that, or something you've been claiming because you, some of the write-offs and things that, we see that people try to do, it's just sad, because again, they entrusted this quote unquote person, and they have the information is incorrect, it's on the wrong form, it has all the makings of an audit. Yeah, because either you're not quote unquote a good business person, or these inaccuracies are lies or fraudulent, and we would prefer they think we don't want them to think the latter. We don't want them to think you did this fraudulently. We want them to think, you would hope that they thought that you did it by mistake or because you didn't know, but not purposely. Again,
an honest oversight.
Honest oversight, correct. You want it to be in that capacity and all of that. So like I say again, you have to be cautious, or be wise with whom you're letting prepare your taxes. And not to say that every quote unquote family member or new person doesn't know how to do it. Just understand that if you have a complex return, they probably don't know all of the ins and outs. And more importantly,
of course, makes sense.
Yeah, when and if it quote unquote is targeted or say flagged, and you have to go and address these issues, whatever, they don't know what to say, do, or go over and trying to help your situation.
So, my cousin Larry, he knows how to do 1040s, right? He can do 1040s all day.
Okay.
But when it comes to, capital gains, revenue from properties, and other assets and things like that, he doesn't have a clue, right? So even though a person may not be doing something negligently, they could be missing money too, right? Because things are not being filed correctly.
Absolutely.
Yeah.
So again, like I said, you want to get with an accountant that you can speak with, and that you can say meet with regularly, and not just once a year. Especially if you've gotten into businesses, stocks, bonds, rental properties, and other investments and things of that nature. You definitely want to kind of be aware of that. And one of the things which is going on now are the dreaded FAFSA forms. A lot of us don't know how to, when you got kids that are going to college, they don't know how to fill out those FAFSAs, or either they didn't prepare their taxes, or either they did them, say, not correctly, or they got two people in the household that's on the we have mom and dad in the household on the FAFSA form, but we only have mom's taxes or whatever. Like, well, where's dad's? Just little things or whatever that continually pop up that can be problematic, and not just in, say, the tax realm, but also, say, again, in the education credits, or say college education FAFSA requirements to allow them to get their different grants and all of that. And another thing regarding the self-employed, really quick, at some point in time, you're going to, well, I would hope that we're all going to retire, and we want to retire with Social Security. And I won't get into whether it'll be there or not be there, but simply put, a lot of times the self-employed guys, as you had mentioned earlier, they made $100,000 and they'll go to a quote unquote tax preparer and they'll bring up all these expenses. And in general, we'll take you for your word. So your gross income is $100,000. Now you said you had $95,000 in expenses, so you have a net income of $5,000, which for tax purposes, let's say again at 10%, 53%, but let's say at 10% for simple math, you're gonna owe $500. Okay, well that's the average guy, hey, I'll take it. However, now come time for Social Security has what's known as a point system. But you don't have you're not accumulating the proper amount of points to qualify for Social Security. And unfortunately, if you don't have someone explaining that to you, now here we are 60, 62, 65, 67. Or I had a guy, unfortunately, came into my office at 67 and said, Lavelle, I'm retiring. I'm out of here. I'm going. I don't know how much I'm going to get from Social Security. Okay. We called Social Security, waited out 53 minutes to get through to Social Security, but we called Social Security. And when they told that man that he didn't have the points to qualify to receive any Social Security benefits, he was in tears. Because he's 67.
So and he's never put in, he didn't, year after year, he didn't put enough into the pot.
He never, well, he's always been at that handyman or whatever. And he came to me, say later or whatever, and I would ask him questions. But again, if you're in a habit, or like we spoke about earned income earlier, if you're used to getting that $3,000 refund or that $9,000, that's all you know, but that's all you want. Well, if you're in that same dynamic of you say grossed $100,000, but you have $95,000 in expenses, and now you have a $5,000 say profit, and you pay again say $500 exactly. You pay taxes on that. That's what you know, and that's what you like, because I'm okay with writing that $500, that $750 check, but you're not putting anything into Social Security. So again, to tell you at 60 anything, but at 67 in his case, it was devastating, because it's one thing to get a $500-$600 check from Social Security. It's a whole different animal to get zero from Social Security. And this guy was a handyman and worker, or a hustler, for lack of a better word, all of his life. And unfortunately, he was not going to get anything. And we took care of some things that got him where he'll get Social Security another 2 years. But now 67 for him becomes 69. So now he's got to work extra, or two more years just to get those points, to get the rest of the points that he needs to even qualify. Wow. So again, back to the BYOB class, or Be Your Own Boss, we go over the whole dynamics of whether you want to become an LLC, whether you want to become an S Corp. LLCs, a lot of people don't understand that as an LLC, you cannot put yourself as the owner on payroll. You can't do it. So if you can't put yourself on payroll, either you're subject to self-employment tax, which is a higher tax bracket, or you're not paying again into Social Security. As a S Corp, we can set you up where you're now the employer, but you're the employee. So we can give you what's known as a salary. So now at the end of the year, you're going to get a W-2. And we explain to guys, if you're trying to say qualify for a house or things like that, when you take a W-2 to your loan officer, to your bank or whatever, he's going to take your income level, and he's going to take your income, your wages, divided by the 12, and that's where we'll start it as far as your gross monthly income, and do whatever debt to income ratio requirements that they have. As self-employed, if you take that exact same amount with a 1099, they're going to want to see either your Schedule C, your profit and loss, because they know that self-employed people, we gross X amount of dollars, but we expense out everything that we possibly can. If you don't have an accountant that's going to ask you the questions, or that you can speak with yearly about this on a regular basis, are you looking to buy a house this year? Are you starting a business this year, where you know this is the things we have to do, because we have to show income. So that same scenario, that guy that shows a $5,000 net profit every year, if you divide that by 12, that's less than $500 a month. What do they qualify for when it comes to purchasing a home? If all you have is $500 a month, best case, if we have a 50% debt to income ratio, you're only going to qualify for a $250 mortgage payment. Where can you get a house for $500, but where can you get one for $250?
Yeah, I definitely see where the education comes in on that, because, I mean, I would venture to say that most of us don't even know all that stuff. You know what I mean? We think about the business, or we think about, we listen to people tell us how we can pay less taxes, for lack of a better word, and we just get on that track. We don't think about the ramifications down the line, how that impact our lives financially.
Oh, absolutely.
I want to segue a little bit into which ties into the education part of your BYOB.
BYOB,
BYOB.
be your own boss.
Be your boss.
Yes.
There are so many people online right now. Honest people that really are trying to give information, but an overwhelming amount of people that are just giving false information and scamming. In your experience in dealing with clients year in and year out, have you dealt with clients that have been negatively impacted by the information they've been receiving that wasn't correct from these online gurus when it comes to tax preparation or how to get the most from the government,
Right.
Whatever. So have you?
Yeah, I mean, as you said, there are so many quote unquote gurus out there that are passing on partial or misinformation or flat out erroneous information. And again, a lot of people, because they are listening to people who have a lot of followers. Well, a lot of times when you have a lot of followers, it may just be because you're saying things that appeal to people, and you're gaining, say, traction, or you're getting quote unquote clicks or likes. Doesn't make that information correct, So, unfortunately, when you go out and say set up the business in the wrong way, don't set up the business, take a deduction that you're not eligible to take, don't report certain income even though it's gone through your bank account. And again, IRS doesn't always look at all of these things, but they're readily available to turn around, for them to look at should they decide to verify what you've done. And again, a lot of times it just has to make sense. And when we have these quote unquote gurus that are telling you a part of the picture, or they're also telling you the same information that they're telling the next person, well, a lot of times it's not a one size fits all as to where we're at in the dynamic of our life or whatever. So you may have a spouse that is making $100,000 with a W-2. So that will propel you or allow you to maybe qualify for a home. Well, I don't have a spouse, so all I have is my $5,000 net income that my guru told me to go out and do. So I'm not getting Social Security, and I'm not qualifying for anything. So then if I want to try to go get a house, get a car, I have to either do, different hoops or jump through different things to try to get to qualify for this thing and all of that. And more importantly, when these people who are telling you this information, I hate to say consider the source, I would just say research what you're being told or whatever. This Transparency Act, as far as the businesses that they've come out with, where everyone's saying, I got to do this, they're going to fine me for $500, and they're giving you part of the information or whatever, and we're getting so many calls, and hey, I got to do this, I got to fill out this paperwork, I got to do this, somebody's going to fine me $500. Well, not necessarily. That's not the case, and there's more information involved. And in light of time, we won't go through the whole dynamic of it. But it's just that's not the situation.
Yeah.
But it's the same with the these other credits. For example, they have this ERC, Employee Retention Credit. Well, it's employee. If you were 1099, you're not employee. Okay, you're independent contractor. You don't qualify. However, there are gurus or people who prepare them, thinking that the IRS will send you this check because they're sending out, money if you fill out this, say if you have someone fill this paperwork out. But again, because they send you the money does not mean that they're not going to come back and ask for that money.
Come back and get it, right?
And again, when you quote unquote have on your paperwork self-prepared or that you did it, and regardless of whether you did it or someone else did it, they want the money back from you.
You're on the hook.
Yeah, you're on the hook for this money or whatever. So you need to understand that you didn't qualify for that to begin with or whatever. So there again, back to the ERC, there's a lot of people who thought that they qualified and they don't, or they've already filled it out desperately because they want. I mean, it's a nice chunk of money you can get, $10,000-$20,000 or whatever. So. And they think it's from the IRS, so it must be okay. But the IRS will send you money based on what you sent them. And when they do their checks and balances and say, hey, wait a minute, this is not accurate, we need you to prove it, or we know that this is not correct, we want our money back, plus penalties and interest, you may not have. That $20,000 was probably spent before you got it. And I don't know what the person may or may not have charged you for it, but whatever the case may be, you don't have $20,000.
Right.
So now you're indebted to the IRS for the next and your interest continues to accrue. So you're indebted to the IRS for years, sometimes decades, or again, some people are brazen enough to say, well, I won't file.
Yeah, so that reminds me of the whole PPP situation where a lot of people just misunderstood what its purpose was.
Right.
And a lot of people knew what its purpose was, but filed anyway because, from my understanding, the glitch was they were trying to get the money out to people quickly, so they bypass some processes, right?
Right.
Some safeguards there.
Sure.
Just to get the money to them, and people capitalized off that because they were able to file these erroneous papers.
Yes.
To get that money, and
Correct.
they didn't even have any employees.
Correct.
Many of them didn't even have employees.
Right.
So had they been scrutinizing that along the way, then a lot of those people probably would never have been qualified for the money.
Right. Correct.
Right? But they're coming back and they're looking for those folks. I mean, a lot of people have gotten prosecuted already, and they're still prosecuting people.
Yeah.
And they intend to continue to process, looking for people who, did that. So to your point, they will come back.
Right.
You think you've gotten away with it, and I can't imagine a person saying, I got 12 employees, so I need this money to pay my employees, and you don't have one employee. That takes a lot of guts.
It does.
Have you experienced, not experienced it, but have you talked to some people that may have gotten caught up in that?
Well, yes, absolutely. And I mean, as I said earlier, some of our clients, they didn't qualify because they either number one, some of them were under the table, and then they wanted to bring it, to the forefront, say, hey, I qualify because I have a business and I'm the employee, which, by the way, with the PPP, you could be your own employee, meaning if it were, say, you as an independent contractor, you were the employee. But again, we had to determine, or we had to show that we were paying ourselves. And a lot of times we were unable to show that. And we didn't have, quote unquote, a payroll system, or we didn't have a ADP by our side, or an accountant that was handling your payroll. We didn't have any of that. We just said, like, to your point, we just said, I have payroll, and this is what I've been paying my folk or myself or whatever, and this is the money that I qualify for, and we get it. And even if we got it, we still didn't put ourselves on payroll. So if you got the $20,000 and you're saying that you were making, say, $5,000 a month, well, why didn't you write yourself a check for $5,000 a month to pay yourself with this money that you received?
So that's basically a person that's self-employed.
Correct.
Can you explain that, just for in a realm that you work in taxes, the difference between self-employed, LLC, and small business? Can you explain that? Because some people kind of get it mixed up, like, I'll let you explain it.
Okay.
Yeah.
So, for example, in general, self-employed means that you're either going to be 1099, you are what's known as an independent contractor. You work for yourself. You do not work for a company. So again, you're going to receive, say, cash for your services, or some of the payment systems, the Cash App, sales, or whatever. And at the end of the year, you may not get a 1099. Okay. W-2, or say an employee, you're going to receive a W-2. You're going to receive a paycheck every 2 weeks, or say bi-weekly or semi-monthly or monthly, whatever your pay frequency is, you're going to receive that. So the advantages right now for self-employed, you do have expenses. When you're conducting, say, your business and you're talking on your cell phone, you can write off a portion of that because you're using your cell phone for business. When you're using your vehicle to go to a appointment or go to a place to provide a service for somebody, now we can deduct, say, a part of your vehicle, or say the mileage and things of that nature. Okay, employees right now, you don't have any of those deductions or whatever. Prior to 2018, you did have those unreimbursed employee business expenses. However, with Tax Cuts and Jobs Act in 2018, unreimbursed employee business expenses went away. So that being said, the person that's working from home, the person that's a W-2 employee and they're working from home, using their phone, using their internet, using their utilities, they can no longer write that off because they are an employee. If you are an independent contractor or you're 1099, you can still write those things off.